So markets have been fairly flat this week. The key change on a sector level has been in healthcare. So we had the draft of the Senate health bill yesterday, which was positive for healthcare stocks, drug stocks. We've also seen a little bit of a rebound in technology this week and continuing weakness in energy prices. The key volatility that we've seen has been in sterling. That's because of, firstly, the Governor Carney's Mansion House speech on Tuesday, which he said now is not the time to raise rates. We saw quite a steep fall in sterling on the back of that speech, which was very rapidly contradicted by Andy Haldane, the chief economist, who said it would be prudent moving into the second half of this year to raise rates. So that sort of dissension in the ranks has left us looking at the MPC committee and their composition. What is interesting is Tristan Forbes will depart the committee, and that'll leave two established hawks on there, Andy Haldane moving towards that camp this week. And then you've got four members of the committee who continue to want to leave rates on hold, and a new member who is rumoured to be of that persuasion. So it's still very balanced towards keeping rates on hold, but there's a little bit of verbal intervention going on in the markets that worked very well this week in terms of stabilising the pound without having to actually raise rates. So we're a year on from the Brexit vote, so it's interesting just to look at what has happened over the last year. The key event has been that inflation has really picked up, so that's gone from around 0.5% to 3% in terms of that rate. Unemployment continued to fall and now at very, very low levels where one would expect to see more inflation outside of that import-led inflation. GDP having picked up quite substantially straight after the vote, and that's probably because of looser financial conditions, has now started to roll over, and we've gone from being the best GDP growth rate to the worst in Europe over the last year. And retail sales have really sort of started to deteriorate quite markedly. The effect in the bond market has been for a flattening of the curve, so that shows that the market or the MPC is getting more hawkish in terms of raising rates at the short end, but the market is getting less positive about longer term growth. So as you can see at the longer end, those yields have been falling. Next week continues to be light. We've got Nike and Walgreens on Thursday. During the week we saw a really interesting announcement from Nike. They're choosing to sell their product directly on the Amazon platform to reduce counterfeiting. That is part of their process to increase the online sales and increase the direct-to-consumer, which is now around 20% of their sales, with obviously the component going through their own stores. The impact on the other athletic retailers was quite large, so we saw Foot Locker falling 10%, and that echoes what happened last Friday when Amazon bought Whole Foods. That announcement put 14 billion onto the Whole Foods and the Amazon share prices or market capitalizations, but took around 56 billion off the food retailing industry. So again, you can see disruption and Amazon moving into new verticals impacting the incumbents within those spaces. That's it for me. Thanks very much.